Hey, good morning. This is Meir Valensky with Driving Markets, talking about markets while driving. So let's have a look what is driving markets last week and what's likely to drive markets next week. So last week, what happened was that the Dow, the Nasdaq, the S&P all fell sharply on Friday. They closed the week on the lows. Why was that? Simply because there's the fear of inflation. If we go back a little bit to the Wednesday and Thursday PPI and CPI, you would see that they were higher than expected. Well, initially the market on Thursday tanked, actually dropped and then turned on a sixpence and went up. And everyone's asking me, I don't understand, inflation is higher than expected. Why would the markets go up? And I mentioned in a longer driving markets video on YouTube, the reason behind that on Thursday was because there was a view that inflation might have topped out. Then on Friday, the governors of Kansas City, San Francisco, came out and said that interest rates need to go up a lot higher to combat inflation, to be far more restrictive, and that sent the markets absolutely crashing. The Dow closed down 427 points on Friday. Many times I've said to you in these broadcasts that is inevitably a dead cat bounce. It's where markets actually are going down in a bear market or bear market rally or bear rally. Is where markets are going down, that all of a sudden you have an up day, and what happens is that up day misleads investors and traders. They believe that they're going to miss out, have this FOMO, this fear of missing out in financial markets or on the action, and they go long of stock. Then when the market reverses and goes back down, then these investors, these traders that have bought the market on the fear that they're going to miss out, end up now with their assets, their shares or their cryptos or their FX at a higher level, and again their losses are going to be far greater than first anticipated. So Friday, markets closed down again on the back of inflation fears. Inflation fears are here, they're going to stay, and inflation is likely to go up further towards the end of the year and into 2023. There is a view from many people, some senior colleagues, that inflation has topped out because it's a historic number. I don't believe so. I think there's a lot of undercurrent of inflation there, especially in food and manufacturing. I think we're going to see significant rise in inflation. Maybe housing might come down because as rates rise, then that's going to have an impact on housing. So for example, in America now you've got 30-year mortgages at over 7%. That's doubled where it was at the beginning of the year, and that is going to have a big impact on the housing sector. In fact, this week you've got existing home sales coming out in the States, and they're expecting the number to be lower, obviously a lot lower than the previous month, as the whole market there is dampening down simply because of rising interest rates. Cryptocurrencies, you're going to have Bitcoin going down to 15,000. This week you've got big numbers coming out with the banks. The banks are reporting, Netflix is reporting, you've got Morgan Stanley, you've got Bank of America, you've got Milan, you've got what else do you have? Barclays Bank reporting. So the banks are expecting good results, but the high tech is expecting poor results because the strong dollar is impacting on their sales and profitability. You also got the balance of trade tomorrow, Monday, in China. Big number that's going to have a big impact on foreign exchange markets. And then you've got GDP in China on Tuesday, expecting a bigger number, 3.6. The reason being because China's now opening up and coming out of lockdowns. China's been seriously impacted by the corona and the lockdowns, and therefore the GDP has fallen apart over the last 12 months. But China's in trouble generally simply because its property sector is completely trashed, down 30-40% and likely to fall further. That fall in property is going to be mimicked and mirrored across in the States and the UK and other property sectors. So you see properties fall over the next 12 months as well. You've got inflation numbers out in the UK. Okay, expecting 9.9%, same as last month. Could be a lot more. Remember, UK has just changed its Chancellor of Exchequer to James Hunt from Kwasi, who did a disastrous job on the mini budget. Liz Truss is in trouble in the UK, and they need to start raising interest rates and buying the bonds back to give confidence to global markets. This is Meir Valensky with Driving Markets. Subscribe, like, share with friends. I've also got Instagram, so looking forward to hear from you. Have a good day. Be safe.